Hi folks, this is CA Vardhamam Rakhecha, and in today's video we are going to discuss about the merger of HDFC Bank Limited with HDFC Limited. Now we all know that 1 plus 1 is equal to 2. But in Hindi there is a popular saying that एक और एक 11 होते हैं, meaning if two giants merge together and if they contribute towards the growth of each other, then the benefit which they can reap will not only be restricted to 1 plus 1 is equal to 2, but could be as exponential as 1 plus 1 is equal to 11. Such could be the impact of merger if it is executed appropriately, and that's what has been predicted of the merger of HDFC twins. The experts also acclaimed the merger and called it as marriage made in heaven. And the market also rejoiced the merger as both the HDFC twins witnessed their highest single intraday gain, closing at 10% above approximately from the preceding day of the date of announcement of merger. So has the market already discounted the impact of merger, or even at this valuation HDFC twins are attractive? Before we find out this, let us understand about the HDFC twins. HDFC Group is India's one of the largest financial conglomerate and is one of the highly reputed business entity. HDFC Group was established way back in 1977 with the establishment of HDFC Limited. HDFC Limited stands for Housing Development Financial Corporation Limited. It promotes housing for all like government, as it lends money primarily for construction of house, purchase of house, and for purchase of apartments. The loan which it provides, it receives in consideration interest, and the loan which it provides is totally secured, as it takes the mortgage of house as collateral. Now if we look composition of loan, it primarily lends to individual, as 77% of the loan is given to individuals, 10% towards construction finance, 7% towards lease rental discounting, and 6% towards corporates. As it lends majority of loan to individual, its ticket size of loan is small. Thereby, even if there is a default by few customers, it will not impact the bank majorly. And the non-performing assets of the bank will be in control, as it primarily focuses towards retail customers, which is a good thing. Now let's look at the performance of HDFC Limited. If we observe, the share price back around 2014 was hovering at 800, and today it was nearly 2300, and just 15 days ago it had touched 2500. So nearly it has given a return of 300% in a span of 8 years. And also if you look back in 1990s, its share price was just around 20 to 25 rupees, and if that time someone has acquired and is still holding, he has won a jackpot, as its share price has moved up from 20 rupees to presently 2300 approximately. And in addition, the HDFC Limited has also given splits and bonuses. And if we look at the numbers of profitability, that is also amazing, as in 2018 its profit was around 11,980 crores, which has leapfrogged to 18,740 crores last year there was a little higher profit of 21,435 crore, but that was due to exceptional gain which arose due to amalgamation of Griha Finance with Bandhan Bank. And if we talk about the earnings of the bank, then in around 2018 March it was 85, which has increased to 120 in March 2021. So it has zoomed around 60% in 3 financial year despite COVID-19 pandemic. So the HDFC Limited has been a stellar and has outperformed the benchmark indices since decades and has given handsome returns to its investors. Now let us discuss about its subsidiary, HDFC Bank. Way back in 1990, privatization was in full swing in India, and HDFC Group applied for banking license in India and they got it in 1995. So HDFC Bank commenced its operations with Aditya Puriji heading their banking operations, who became a synonym with HDFC Bank. And HDFC Bank came up with an interesting move in 1997, wherein they asked their employees to bring cup of tea and coffee from their home. And this interesting move helped the bank to save approximately 50 lakh, which was massive during those days. HDFC Bank also joined hands, merged with Times Bank in 2000 and with the Centurion Bank of Punjab in 2009. This merger helped the bank to strengthen its customer base, to expand its branches and acquire the efficient workforce from the banks which were merged. Talking about the operations of HDFC Bank, so it can be divided into 4 parts. Number 1 part is it is into wholesale banking, where it lends primarily to corporates. Secondly, it is into retail banking, wherein it lends primarily to individuals. And thirdly, it acts as custodian, wherein it provides foreign exchange management services, hedging strategies, etc. are the some of the services which it provides as a custodian of the bank. And lastly, it also provides other services such as debit card and credit card services. Now let us look at the performance of HDFC Bank Limited. If we talk about the performance of the bank, so in 2014 approx it was 300 rupees, and presently it was trading a fortnight ago at around 1500. So approximately 5x returns in a span of 8 years. And if we go back, then in 1995 it was trading at 4 rupees and today it is at around 1500 rupees. And in addition, it has given splits and bonuses. So those who have acquired during those times and are sitting tight have won a lottery. And if we talk about the profitability of the bank, if you see the revenue, it was 600 billion, to be precise 589.6 billion in financial year 18, which has surged to 966.4 billion in the financial year 21. And if you talk about the profitability, it was 185.1 billion in financial year 18, which has jumped to 318.3 billion. And you can see it has been rising consistently. And if we talk about the earnings of the bank, so you can see it is a straight line. It was approximately 36 in March 2018 to 58 in March 21, which depicts a growth of approximately 60% in 3 financial year despite of the COVID pandemic which we all witnessed. And also if you talk about the non-performing assets of the bank, it is just 0.4 percentage. So compared to its peers, it is very low. So based on the financials, we can conclude that this bank has been a sensational and has given superb return to its investors and has a promising future. And if we talk about the synonym of HDFC Bank, the man behind HDFC Bank, the legend Aditya Puri ji, his tenure got over last year as he stepped down and handed over the reins to Shashidharan Jagdishan. Aditya Puri ji commented that do not equate him with HDFC Bank, as Aditya Puri ji is not equal to HDFC Bank. He specified that he was just contributing towards the growth of HDFC Bank similar to many others, and he promised that HDFC Bank has an amazing future as it will be taken care by the next leaders, which will take the HDFC Bank to humongous heights. And that's what is appearing, because if we talk about the new managing director Shashidharan Jagdishan, he is a chartered accountant with 30 years of banking experience, out of which 24 years of banking experience is in HDFC Bank. And as soon as he comes, he has come up with an interesting move of merging HDFC Bank with HDFC Limited, wherein HDFC Bank was a subsidiary of HDFC Limited and he merged the both, as he believes now it's the time for the son to take over the business from the father. So let us look at the benefits from the merger. A lot of benefit is predicted from the merger of HDFC twins. The first benefit anticipated from the merger is the utilization of funds at a lower interest rate. The basic difference between HDFC Bank and HDFC Limited is that HDFC Limited is a non-banking financial company. A non-banking financial company cannot accept demand deposits which HDFC Bank gets in the form of saving account and current account, where it offers to the depositors interest at a very nominal rate varying from 0% to 3%. And HDFC Bank has a very high CASA ratio of 48%. This funds which it gets at a lower interest can be made accessible to the customers of HDFC Limited, which will expand the net interest margin of the bank overall. The second advantage expected from the merger is that it will reduce the proportion of unsecured loan of HDFC Bank, as HDFC Limited will lend to customers against a collateral. Now what the merger does is that it combines the operations of HDFC Limited with HDFC Bank, as operations of HDFC Limited will now be taken care by HDFC Bank. This will lead to slide in non-performing assets of the bank, and it will lead to improvement in capital efficiency and improve the profitability of the bank. The third boon expected from the merger is that it will lead the HDFC Bank to fulfill the criteria of government to lend loans to priority sector. And one of the priority sector where the government wants banks to lend is lending towards housing for all, and HDFC Limited caters to this requirement. And once the operation of HDFC Limited will get combined with HDFC Bank, this criteria will be fulfilled easily. Fourthly, this merger will bolster the customer base of the bank, because HDFC Limited has approximately 77 lakh customers and 21 lakh depositors, and similarly HDFC Bank has humongous 6.8 crore customers. This merger will enable both the HDFC Bank and Limited to cross-sell, to sell their products to customers of each other, and which will enhance the customer base of both the organization. This will lead to a fifth benefit, wherein HDFC Bank will be able to grow its loan by 42%, and its market share in terms of loan will increase from 11% to 15%. Let's talk about the valuation. Now if we look at the merged EPS at the beginning of financial year 21-22, it is around 67, and historically HDFC Bank has been growing at a CAGR of 20%. So if we multiply 67 with 20% growth, we get expected merged EPS at around 80 at the end of financial year 22-23. And if we take a median PE of 26, we get anticipated expected price of 2000 plus. And at the end of financial year 22-23, we will have a merged EPS of 80, which if we multiply with 1.22%, as after the merger it is anticipated that HDFC Bank and HDFC Limited will grow at 22%, and so our merged EPS at the end of 23-24 will be at around 98, which multiplied with median PE gives us expected price is 2500 plus. So we can conclude that HDFC Bank was a diamond in the past, and it has still not lost its shine and should definitely be on your radar. So thank you all for joining with us, and if you liked our video, do like it and share it and subscribe to our channel for more videos. Thank you.